Joining us now is Barclays Managing Director and Senior Equity Analyst Jason Goldberg. Welcome. It's nice to have you.
Thanks, Sarah.
What are the key macro questions that you're going to be tackling from the big bank CEOs?
Yeah, no, certainly a lot going on right now. You know, the biggest, obviously, with the upcoming Fed pivot, with the Fed widely expected to cut interest rates in a couple of weeks, and how that influences the outlook for loan growth, deposit costs, M&A, and just the overall economy.
What are you seeing on that front? Because financials had been outperforming the market, and we're looking forward to lower interest rates, right?
Yeah, no, certainly. You know, I think in the near term, you know, loan growth is still a bit subdued, but I think investors looking ahead, and, you know, last year the biggest impediment to bank stocks was the rapid rise in funding costs as deposit costs went up. And, you know, historically, as the Fed begins to cut, you know, banks should have the ability to lower those funding costs, you know, looking out. So they'll get a little bit of that benefit this quarter, but a fair amount looking, you know, beyond that. In addition, you know, trading revenues have been quite, you know, strong this quarter. You know, certainly a lot of markets are higher, a lot of volatility, a lot of volumes. So that should certainly benefit the biggest banks, as well as this kind of investment banking fee recovery that began earlier in the year should continue.
Where are we in the discussion about expense control? And I guess AI, tech innovation, and the ability for that to sort of re-rate expense structure, and then as a result, capital return, I assume, right?
Yeah, you know, certainly on the expense front, you know, I think one of the big themes last year is a lot of companies pointing to stable expense growth for 2024, just coming off of you know, 2023, where they kind of got adversely impacted by inflation. Kind of going forward, you know, we do think you'll see an uptick in expense growth, but more of a focus on the kind of return of positive operating leverage, you know, as revenue comes back. You know, clearly, though, this industry is poised to benefit from AI. You're certainly starting to see some of that come through. You know, the industry as a whole has benefited a lot from technology. You can now, you know, deposit a check on your phone, and, you know, there's a lot more innovation coming. So that's something we think we'll hear about next week as well.
So what is the deal with loan growth? When does it really start to come back?
You know, certainly historically, it tends to accelerate after the Fed does begin to ease. So that's something we do expect to see, you know, in a couple of weeks' time. I think corporates kind of came into the year thinking, all right, the Fed's going to act aggressively. I'll wait a little bit to borrow. The Fed didn't. But, you know, you get to a point where the Fed is now about to cut, and, you know, corporations do need to reinvest back into their business. You know, so we do think you'll see a little bit of pickup into the fourth quarter and more so into 2025. I also think kind of getting through the election and resolving some of that uncertainty could help as well. Speaking
of the election, you know, all year long we sort of had this tantalizing promise of a better IPO pipeline and a more robust M&A backdrop. Does the election kind of put a wall down on that, and we got to wait till next year? You know, if you go back historically, the election hasn't really impacted the IPO market. I know you hear a lot about that, but if you think about it, September, October, November historically have actually been good, you know, IPO months, kind of coming out of the Labor Day holiday. So, you know, while August was very subdued, you know, it does feel like the pipelines are, you know, beginning to rebuild. And it's certainly something we're looking forward to. The volatility in the markets of late, you know, does maybe cause some angst. But there's still a fair amount of companies that are looking to go public.
That's what I was wondering. If the optimism, the recent optimism around capital markets activity picking up, M&A, IPOs, is intact after what we're seeing in the market.
We'll see. I think, you know, certainly corporates need capital, and there's just an impetus to merge really across a lot of different industries. You know, the CEO dialogue continues to be active. There's some kind of regulatory uncertainties that maybe need to be resolved. But, you know, I think there's, you know, a fair amount of chatter going on.